Year-end tax planning. This video is all about year-end tax planning. We do regular updates on tax and accounting, so if you'd like to be kept up to date, then please subscribe to the channel. And if you press the like button, it helps us and it helps the channel. So thank you for doing that. So in terms of year-end tax planning, so what sort of years are we talking about?
So we have the company year-ends, which can be any year-end, and we have the tax year-end, which is the 5th of April.
So we have the 5th of April and the company year-end, and the company is whenever your year-end, which can be any date, literally any date, but a lot of them are March and December, aren't they? So we've got those two dates. So remind me, why is year-end tax planning important?
So with the corporation tax rate currently at 25%, with a few tweaks and a bit of tax planning towards the end of the year, we can save a significant amount of corporation tax.
Yeah, and then in terms of personal tax, there are some silly tax rates around which we want to avoid paying.
Yes, absolutely. Yeah.
So what are the main things that we look at when we're talking about planning for the year end?
So what we'll look at today is a few areas, which is pension contributions, salary and dividend planning, capital allowances, a few accounting areas such as bad debt review, deferred income, and from a personal tax point of view, we would look at avoiding the 60% tax band, which applies when income crosses over 100,000.
Yeah, and I think we also need to just have a little look at personal allowances to make sure that we use all our allowances as well. So if we take those from the top, I think the first thing, if I remember, we talked about there was pensions. So how can pensions reduce our tax?
So every individual has an annual allowance, which is £60,000. Of course, it is tapered for high income earners. However, a £60,000 contribution can save £15,000 in corporation tax at 5%. This contribution can be made from the company directly into the individual's pension scheme and with no PAY or national insurance implications.
And the £60,000, if you're going to reduce your personal income and you're paying 40 or 60% tax, then that's a whole load more as well, depending on just on your circumstances. So there's a lot of tax savings. So pensions. And when do you get the allowance for your pension?
It is based on every tax year, you get your £60,000 allowance.
And you have to actually make the payment in that tax year.
Yes, correct. And one other thing to note as well is that you can carry forward your unused allowance for the last 3 tax years, and this is an important area to consider because you can make a sizable contribution to the pension and save even more corporation tax.
Yeah, so 3 years means that you've got 4 years in play. You've got the current year and then you've got the previous 3 years. Then when we go over into the next year, that last one falls out and the new one comes. And of course 4 sixes, 24, so that's £240,000. Is that right? £240,000 you can potentially put into your pension, which is more than I've got to put into my pension anyway. So there we go. So that's pensions. And then we're going to look at dividend policy and how we extract profits from a company.
Yes, so a salary taken by a director is a deductible expense for corporation tax purposes, whereas a dividend is not. And therefore, the optimal salary and dividend split is very important in saving corporation tax. This is an area that we're looking at for all our clients to establish the best sort of split between salary and dividends.
Yeah, and that's part of the planning. And then the other one that's going to save a lot of tax potentially is capital allowances. So what are capital allowances?
So capital allowances are available on certain assets that a company purchases. For example, plant and machinery, vans, electric cars.
If they're new.
So
why is it capital allowances important for the year-end tax planning?
So we've got the annual investment allowance, which is 100% on the cost of the item. And plus we've got the first year allowance, again 100% on the cost of the asset. And the first year allowance would be available on electric cars. And this would mean that the cost of the item is offset against the profit.
Yeah.
And therefore saving a significant amount of corporation tax.
So if you're buying a new van, if you buy on the 4th of April, you get the allowance in the old year, 100%, all the cost of the van. And if you buy on the 6th of April, you have to wait another year before you get any benefit through the income tax system. So it's quite a big change. It can be very important, particularly if you're paying higher rates of tax. So what are the other smaller things that we might look at in accounting terms through a company's accounts?
So what we also look at is when preparing accounts for our clients is we review bad debts, any invoices which are not recoverable, we would write that off. We would also look at deferred income, which means any income for which the service hasn't been provided in that financial year can be deferred, and therefore it would save corporation tax. And finally, loss relief is quite important to consider. The correct loss relief between group of companies can help save a significant amount of corporation tax.
And then just to finish it off, in terms of personal tax planning, you've got a £20,000 allowance for an ISA for each. A married couple, that's £40,000, so you might want to take advantage of that. Or if you're a thrifty person, on the 6th of April, you might want to put some money into your ISA because you get a new allowance on the 6th of April, so it's worth considering that. It's also just worth considering your capital gains tax position and making sure that if you've got losses, you use the losses properly and use your allowances properly. So just having a review if you are somebody who pays capital gains tax, and there's not many people that do actually, are there? So planning your pensions, your capital allowances, your dividend policy can give significant tax savings. And if you want help with that, then you know where we are. We do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please like and subscribe. Thank you very much.